And we are live. Welcome to Impact Money, where we tell you what is going on. And we are working to close central banks around the globe. Uh, Thanks for joining us on Smart Money on your TVs, on Smart Money Culture TV there in Texas and Louisiana. And we're also streaming around the world on X or Twitter, YouTube, LinkedIn, and the works. Pretty interesting weekend and day that we've had. Of course, the crypto markets are responding pretty nicely to this influx of money. The house, of course, everybody pretty upset. I mean, around my parts anyway, the people that I'm around with, pretty upset about this funding package that went through. It's really funny the way it's a 95, I believe a $95 billion package. Along with that $95 billion is another around $3 billion that is given to the Federal Reserve. And that is just for them to front the paper money digitally and printed, because of course they need cash for some of that business they're doing over there in those places. So it's a real big scam, guys. We've been talking about it quite a bit. It's the monetary revolution. We're doing as much as we can to fight that. I think that there is no way that we can move forward really successfully as a country until we drop the Federal Reserve. We have to get off these central bank or else. Good morning there, Dr. Castro. Good to see you. We have to get off the central bank. Otherwise, we have no control over anything. Now, actually, it's pretty funny, not funny, but I thought about it quite a bit over the weekend because, how did we get ourselves in this situation? And again, I mean, I know a lot of people, especially, patriots and whatnot, and everybody's just so upset over this funding bill. And we've of course mapped it out for everybody. I don't know anybody else who's mapped it out like this. And look, it costs you this much. So $95 billion bill. I mean, that's about 100. That's very as close as you get, especially with the fee from the central bank. That is $100 billion, right? I mean, it's about as close as you get to it. And that is more than what I calculated before. So $100 billion is more like $1,200 or $1,300 for a family of four, and that's how much it's going to cost you. They're going to take that from inflation because they're already taxing the tax money bring in from the income tax is going to pay the interest on the debt, which is over $34 trillion now. So it's really it is really crazy. But that money going into being paid out, of course, that does act as a stimulus for a bit. Okay, and you're going to see a lot of that money coming into risk assets. And you see we had a pretty nice pump over the weekend as that happened. Now gold is down, and so is silver. Silver is down considerably, which is pretty interesting. Will be great to get Matt's take on that as well. DXY, as we started the show, had edged up. It was down slightly as I went to bed, and it had edged up to even, right there. But anyway, what I was thinking about over the weekend, because, people were quite upset. For someone like myself, it was very obvious they were going to pass the bill. I mean, they're going to pass the bill. That's it. And it doesn't really even matter if they're going to pass the bill because the central bank would have fronted the money anyway, right? So, but they passed the bill so that the I's were dotted and the T's were crossed. So you just got to start to think of how we got into this predicament where Congress and the people in Washington completely go against the will of the people. I mean, Democrats don't want to fund the bill. The Republicans don't want. And then when I say Democrats, Republicans, the people voting Democrat don't want to fund the bill. The people voting Republican don't want to fund the bill. The people don't want to fund the bill, and still Congress overwhelmingly passes the bill. How did we get ourselves in this situation? And then you start to think, well, how did we get ourselves in this situation? And you go back to 1933 and the executive order, I think it was Executive Order 1601, if my memory serves me correct. And that was when they confiscated everyone's gold, right? So that was 1933. Well, first of all, they passed the Federal Reserve Act back in 1913, right? In the dead of night, 1914, we get the World War I, right? So it was explicitly, we weren't supposed to have a central bank in our Constitution. Founding fathers, we weren't supposed to have a central bank. We were only supposed to use gold, actually, gold and silver as currency. And I'm not going to go further back from that right now. A lot of stuff happened back in 1864 that really started the paper money, fiat money. People don't understand that, but I'm not going to get into that right now. Right now, I'm just going to focus on the Federal Reserve and then what happened in 1933. So imagine, so they passed the Federal Reserve Act in the dead of night in 1913, okay? And the Federal Reserve basically takes over the country at that point. If you control the purse, I mean, everybody knows if you control the purse strings, you control whatever it is. If you're in charge of the company and you control the purse strings, then you control the company. If you are in charge of the purse strings of a country, then of course you control the country as well. And so the United States was conquered back in 1913 by the Federal Reserve, by the central banking cartel, which is a group of families who I've mentioned quite a few times. And maybe I'll pull them up again in a minute after I get through with this. So 1933, Woodrow Wilson does this executive order. Let me just make sure I got that right. President. I'm sorry, Roosevelt. I knew I had it wrong. Woodrow Wilson did the Federal Reserve back in 1913. So it was Roosevelt. So Roosevelt signs an executive order, and he confiscates all the gold. And here's the part that is so egregious about it, right? He gives it to the central bank. So the fine in today's terms, I think it was like $100,000 fine or something like that, which, I mean, it was like over, or whatever it was over $1 million in today's value, because of course they've been diluted the US dollar since they started the Federal Reserve for so much that our money's hardly worth anything anymore. So he puts out the executive order. Imagine this happening today. This is like, all right, so we were conquered in 1913, and then they really put the nails in the coffin in 1933 and 1934. So 1933, they confiscate everyone's gold. Imagine this. And if you don't turn your gold in, you're fined basically $1 million. Okay, so everybody has to turn in their gold. And who do they turn the gold into? It's Executive Order 6102, by the way. 6102, Executive Order 6102. You can look it up. Required all persons to deliver on or before May 1, 1933, all but a small amount of gold coin, gold bullion, and gold certificates owned by them to the Federal Reserve in exchange for $20 per ounce. Now, gold right now is trading at $2,400. So $20 per gold ounce. And that's how much they've inflated. Okay. So first of all, they confiscated everyone's gold. At this point, guys, it's over. I mean, it's over. I don't know why we didn't fight back at that point. Maybe the same reason we didn't fight back after what happened 4 years ago. I don't know. It's hard to say what was going on there. But they confiscate everyone's gold. They give it to the central banking cartel. I mean, this is crazy. This is crazy stuff. Take everyone's gold. They give it to the central banking cartel, which has a front name of the Federal Reserve. And then they tell everybody that they are pegging the US dollar. Don't worry, we're pegging the US dollar to to gold, to the price of gold. And those families, just so everybody knows, they were the Rothschilds, the Rockefellers, the Morgans, the Warburgs, Goldman Sachs, Lehman, Kuhn, Loeb. These are actually the families that own the Federal Reserve. Okay, and people say the Federal Reserve is not owned. It is. Rockefeller, Morgan, Warburg, Goldman Sachs, Lehman, Kuhn, Loeb, Lazard, Israel and Moses, Safe, Schiff, Stillman. They said, okay, don't worry, we're going to back it. It's going to be backed. You're going to have your asset backed, right? You're going to have your dollars are going to be backed by gold. And even though they turned it in for $20, that's all they got. Then I guess they moved it up and they pegged it to $35 per ounce, per troy ounce, they say. $35 per ounce, right? And that's what it was pegged for a long time. But the whole trick of the thing, it's not even a trick. I mean, we were conquered, guys. They overthrew the government. They overthrew everything. Central banking cartel is in control of the United States for over 100 years now. That's why we can't get anything done. So then they said, okay, it's pegged, but you can't own any of it. You're not allowed to own any gold. When I was a kid, I used to think that back when we were on the quote-unquote gold standard, that you could take your dollars and go into the bank and pull gold out. What did you think? I mean, didn't that make sense? Doesn't that make sense? Like, I thought that's what you were able to do. You were able to go into the bank and pull out the gold. But you couldn't. The only people that were allowed to trade in gold or US dollars for golds were foreign entities, foreign countries. And I say entities because I don't think if you were Joe Schmo, you could do it, but you probably had to have some type of a corporation or whatever. And it wasn't hard, right? Or you were representing the government. But they were allowed to trade in the US dollars at $35 a troy ounce. At $35. This stuff is trading for $2,400 right now per ounce. Okay. I still think that most of the gold is gone. I don't think we have a lot of gold anymore. I think that Nixon, the more and more we learn, I think that Nixon probably had no choice but to remove, and it's not even a fair statement because they say he took us off the gold standard, but all he did was stop the foreign entities from being able to cash in their dollars for gold that they had stolen from us. So then we still weren't allowed to own gold for a little bit. Then they let us start to own gold back in the 1970s, but of course they pushed up the price into infinity. So we have been, and so I started thinking about, how we got into this situation, how we got here where we don't have any control. We really have no control. We have an illusion of choice. We have basically Democrat, Republican. It really doesn't even make sense to call them that anymore. I don't know. I guess I'll go with that for a minute. But you have the Democrats, and then you have the quote unquote Republicans. But the Republicans appear to just be the controlled opposition. Or you could say the Democrats are controlled opposition, however you want to say it. They both do the same stuff. It doesn't matter who gets in there. And, Tucker, he did an interview, or at least it was released anyway over the weekend. And he said that these guys are scared to death of the intelligence agencies. And I don't doubt that at all. At all. They all go rank and file like, yes, sir, 3 bags full. I mean, it's like they fund the same stuff. And I mean, they get in there and I mean, even just talk about like the stuff that people are, so staunch on, like abortion and, these types of things. the trans stuff. I mean, it's just they all get in line and they fund it one way or the other. So they're obviously, it doesn't matter. It doesn't matter who we put in there. And actually, I hate to say it, but even if Trump gets in, guys, and that's if they let him in. I don't know. I mean, he should. I don't know. It's not looking good. I mean, certainly the man's got the votes, but they have the machines and they have the absentee paper ballots, and those are just absolutely. I don't know. Really, the thought that that he is going to win, of course, one, I think that is kind of far-fetched. But the other part is that he'll be able to do anything. Seems far-fetched. Anyway, that's kind of a little bit of the history that nobody talks about. They don't teach you in school, and that's why we're in this situation. Pop the champagne, I said. The U.S. funds World War III... ... for 2 more months because they're going to need another $100 billion in June. You watch. They needed $100 billion in January. They really were pushing this next $100 billion in February, March. They got it through in April. They're going to need it again in June. Trust me, that's where it's coming. All right, let's bring on the great Matt Dixon. Let's talk more about your money as he drops back in there. How are you, Matt? Hello, sir.
Hey,
Matt. How's it going?
What's up, Matt?
Morning.
Welcome on.
All good. Thanks, Bruce. Thanks for having me again. Yeah, so we're going to have an interesting show today. We've got Eric coming on just to tell us a bit more about runes. So this is the latest
awesome.
craze.
Oh, about runes?
Yeah. So maybe season 2 of Bitcoin. So this is
runes is like man, everyone's really excited about this runes. I'm looking forward to hearing what he has to say. I will, of course, be kind of jumping around at that point, but I will be listening.
You're going to have to listen to the recording because it's going to be fascinating. Looking forward to it. So, I mean, they're saying it's going to ignite season 2 for Bitcoin. So let's see. I mean, Bitcoin's had a pretty good weekend.
It has.
I'll just go on and share my screen. While I'm doing that, it's quite interesting what you're saying about centralization because, these regulators and the people in power, they really are kind of stifling innovation, and they're stifling a lot of things. Freedom, innovation, all sorts of things. So it's a bit of concern. We need to have a show one time again. There's so many potential topics, but we need to discuss regulation, what they're actually doing, how effective it is, and how effective it is at stifling innovation, as I say.
Yep.
So not ideal. So I wanted to start today with dollar index, the US dollar, because this tends to be in general quite inverse, and we've had shows in the past where we've looked at the turning points of the US dollar often correlate with big turning points in the price of Bitcoin and other risk assets, because we looked at market crashes and they always seem to correlate with turns in the US dollar. So that's quite interesting. So right now, we've showed this before, but there's a couple of Fibonacci levels that coincide pretty much exactly. So measuring from the bottom here, which was the date there was December 23. So this top here, which is Feb 24, so I measured that Fibonacci measurement, transpose it to the bottom of this next wave, which is an ABC wave down, and it gave us this level here, 106.66 for DXY. And then the next movement up, I measured this wave up, transposed the bottom of this wave, which is again an ABC, it's actually a 535, that's called a zigzag correction, and transposed to here. And it gave us exactly the same top, or almost exactly the same, 106.64, 106.66. It's, for all intents and purposes, absolutely the same. So it's quite good when you get different, measuring different waves using the Fibonacci measuring tool, and then the actual measurements coincide. It's actually quite powerful when you get this coincidence corroboration kind of effect. And it's showing dollar index potentially just going a little bit higher, and then potentially a turn to the downside. And if that happens, then we may just get a little bit of consolidation right now in Bitcoin and other cryptos. But if dollar index were then to fall substantially, that could be very positive, and it correlate with this new party coming potentially with Bitcoin Rune Season 2, ordinals, all these things. and yeah, a general rally in crypto. So it's looking quite promising from a dollar perspective. And this appears to be a bit of a correction sideways here on dollar index. So if we get one little more push higher, so we'll jump, I suppose, to Bitcoin, just see what's happening with Bitcoin, so how it correlates. So we're expecting potentially just a touch lower on Bitcoin, then moving into the rally, we hope. So let me just find out where's Bitcoin gone. Here it is. So Bitcoin, as you said, has had a great weekend. Bitcoin halving went, and that actually it's the Satoshi, I think, for the first block that was mined is going to be a very, very valuable Satoshi to do this runes. We'll find out a lot more from Eric, but I think it's going to be valued at something like $1 million. So there's a lot of money. I'm really looking forward to finding out more about this. But
this is what the block?
Yeah, not the whole block. It's just the Satoshi, the first Satoshi. So this is like being etched. So it's like, I think, and again, we'll wait for Eric to see, but like the first block of Bitcoin that was ever mined, it was actually encoded about the bank bailout, the second bank bailout. This was the Financial Times headline, and it was the Financial Times headline was actually encoded in the very first Bitcoin block that was ever mined. And I think that's now you're able to sort of etch these things with coding, and I think that's what Runes is all about. But I mean, to be honest, I'm looking forward to learning more about it myself. I've been speaking to a few people who are already involved, and I've got, been involved, and potentially it's going to be, as I say, the second season for Bitcoin. But Bitcoin at the moment we've had is exactly the same. There's no real change, because from the all-time high to the next high, we drew a line there and then just dropped a parallel down to the next low, and that gave us the low that we had just a few days ago, and it's very, very precise. So this just shows you how good some of these technicals are. And this, as I said, I showed on a previous chart, there was a 66% or 67% chance of breaking to a new high here for Bitcoin, 33% chance of breaking down. But if you think about it, if you had your trade in here, and bearing in mind 67% chance, so 2/3 chance it's going higher, only 1/3 it's going down, but then you could put your stop loss just below this parallel line with a potential loss of next to nothing, but an upside gain of a massive potential gain in percentage terms compared with a loss. So these are the sort of trades that you really look for, where the risk and reward is really strongly in your favor.
And we pointed out a number of times on the show that level there between 59,600 and 60,000, that was the level, and it hit it twice at least.
Yeah, we actually pointed out in advance, so it just shows again, we're not just saying this after the event. I remember we pointed out in advance This was the level to look for.
A number of times.
That was the level to jump in on the trade with the stop loss just below. And you can now protect it, move it into profit, so you have a guaranteed profit no matter what happens in the world, and potentially it could grow into really big profit, and who knows where Bitcoin could potentially go to. So I think that this is a really bullish sign for Bitcoin, or as I say, the innovation that's happening. And a lot of time people thought Bitcoin was a bit boring, there's not much you can do with it apart from store a value. But now it's actually, with all this innovation, there's so much more you can do with it. With ordinals, I think that show.
You can just go on even CoinMarketCap or Google like CoinMarketCap new or whatever, and you can see the new tokens and coins that are coming out. And a lot of these coins that are coming out that are built on Bitcoin are coming out with massive market caps. It's like, wow.
Absolutely amazing. Yeah. So this is the good thing about crypto. You see, there's constant innovation going on. It's very much, the innovation, the movement, forward movement, progression. And it's not like the old world of, and the thing is, so many of these things will have applications into business to make business more efficient. It's not just about creating things for the sake of it. And the good thing is about the decentralization as well. We need to move away from centralization, because centralization really does equate with corruption. So we touched just now on, regulators. And I know that regulators often turn a blind eye to big corruption, which is going on with big, well-known people. We know that goes on, but it's actually the small person who just steps out of line just a little bit, or they don't even need to step out of line. I mean, why did they attack Uniswap? Uniswap, a decentralized application. I don't know quite what the reason for that is. I think they said that trading security tokens potentially are being traded on their platform. Again, Uniswap is supposed to be decentralized. I don't know quite what they're attacking, who they're attacking, and what it's all about. But it's not helping with the innovation and progression in the world. They're trying to hold us back into the old world, but the old world is centralization, corruption, and abuse of power. And that's what they're fighting tooth and nail to hang on to that, because that's actually their world, I think. So it's it's frustrating. Anyway, move on to the next token. That's been, I think, quite interesting. Litecoin. I've tried to label Litecoin. It's quite a complicated one at the moment. It looks like we've got an ABC down. So I'm thinking this looks a bit choppy at the moment, but I'm hoping that we're on really low volume. I'm hoping we get a pickup in the crypto markets and we start to see some volume into this, which can really push price higher. But it does appear to be corrected to the downside. So we appear to have an ABC down, which would mean that we're going to rise to a new high above this previous of 112. So there's quite a lot of upside potential there for Litecoin. And even if we look, I'll just look longer term on Litecoin again. We actually moved out of a triangle phase here. I think we've had an ABC higher and ABC down. So I still think we're going to get probably 5 waves to the upside. And when we look at it over a longer term like this, which is a daily chart, we can begin to see potentially it does look a bit more impulsive on the daily chart. We had a really good, as we're often saying here, really good kind of hammer candlestick, bit of a doji, but kind of hammer candlestick, and then a really strong engulfing candle to the upside. And it's looking quite positive. So if we get some volume coming in, you can see volume has really dropped off here. But if we start to see some volume, we can get that push up with Litecoin. And that correlates with what we had with DXY. Maybe we're chopping a little bit, but if DXY starts to break down, the dollar starts to break down a little bit, that means that they are going to be looking more towards easing monetary policy. And we're not that far away from the next Fed meeting. So who knows what they're going to say, but they've got the reasons for not dropping interest rates. But I do believe at some point they will need to drop interest rates. So it'll just be interesting to see what the Fed's position is on this.
I'll tell you, I was talking to a friend. He's a builder here in the area. And he's just shaking his head. The prices of the housing and everything was looking good. But now with everything, of course, people are treading water again.
Yeah, they're treading water because I think people are getting left behind again, where wages are not keeping up with inflation, even though they're saying inflation's under control. It's clearly not properly under control, and that's obviously why they can't lower interest rates at the moment. But I actually do believe that inflation will come down, especially if we have seen the worst for the time being of the geopolitical issues. Then I think inflation is going to come down, and we will start to see growth slowing down, and we'll start to see unemployment picking up. And as I've always said, once you see that cycle low in unemployment and it starts to pick up, that is the time that the economy really starts to slow down. And I personally believe later this year, who knows, it could even be at the end of the year after the election, because I know they're going to try to keep things going. But I don't quite know how they can, because if inflation remains a problem, they can't ease monetary policy. But they want to ease monetary policy because that makes voters and everybody, they want money in the system. They want a lot of liquidity to feel good. They have money to spend. And if inflation's high, they can't do it. But if inflation does drop, then they can start to print money again. So that's what people want. They want free money, effectively. And it sort of makes the government look good. They'll want to vote in the incumbent. So I think the government's very much behind all of this. And they're holding it back, but they'll probably time it beautifully for the election, where they'll start to ease monetary policy, they'll lower interest rates, the economy is all coming back into line, is what the narrative will be. And I think that's what's behind all of this. So we've had Bitcoin, we've had Litecoin, Ethereum, again, it's very you can pretty well clearly see we had basically an impulse down as an A wave. We had an ABC up as a B wave, another impulse down here as a sort of C wave. May or may not be finished. We may have one final push down. It's hard to say, but because this overall looks corrective, I think then we're going to push to new highs here above this recent 4,000, almost 4,100, wasn't it? Previous high. So in general, once again, they're looking constructive. We did say this before the weekend. We said it's probably time to dip your toes in the water. They were the very words we used. And if you had, and we were saying this when Bitcoin dipped to 59,000, it's now 66,000. So it's more than 10% higher than when we were saying that was the likely turning point in the market. And that's the time to dip your toes in. And we're well more than 10% higher now. I mean, not 10%, sorry, we're talking, way more than 10%, aren't we? Anyway, 12%, whatever. So that's just in a week. So if you can make 12% in a week with a low risk trade, because you can have your stop loss very, very close, 12% in a week is absolutely amazing, isn't it?
Yep.
Another good one has been a really powerful token, Binance. They've, really solid. And there they've already appear to have potentially breaking out of this consolidation. It's so powerful, it actually seemed to cut this wave short. Normally you'd expect this wave to dip down below this wave, but it looks as though it's turned to the upside. This is very, very bullish looking. So I think BNB also is showing us signs of going higher. I also looked over the weekend, I was running a workshop, and we looked at ADA, Cardano, which is another very popular old token. And we looked to have, from the low point, some kind of 5-wave move to the upside and a 3-wave move to the downside. So that's telling us that even if this is just an A wave and a B wave down, we should get a C wave up. And we had a target, a minimum target, and we were actually going over Elliott wave analysis, and we're doing a workshop on that. And we actually showed a minimum target. I mean, I can actually draw it in very quickly here, but the minimum target, I think, was 99. Let me just check. So I just measure that Fibonacci, transpose it to the bottom of that wave, and then absolutely 100% is 99 cents on Cardano. And bear in mind, we had a bottom here of 40 cents to 99 cents. You're talking, a lot, over 100% anyway, from that level. Even from where we are now, you're talking pretty well 100% now anyway. So that's really promising. And again, it's just yet another confirmation. And we love to see that in markets. When you get a lot of confluence between different indicators and different assets, then it strengthens the story that there's a lot of upside to be had. And as you rightly said, it's worth mentioning that a couple of things, we've seen gold selling off a little bit. Maybe that's telling us the economy is slowing a little bit. But probably more importantly, I mean, that would tell you why silver's potentially had a bit of a sell-off, because silver is an industrial metal. It has a lot of industrial use cases. As a catalyst, there's many different things silver is used in industry. And so when industry or the economy is slowing down a little bit, then silver is one of the first to sell off. Gold is the inflation hedge, and gold sells off if inflation expectations are dipping. And I think that's what's happening now. Inflation is beginning to show the first signs of tailing off. So that's why you see gold selling off. Same with oil. Oil's kind of similar story to, there is a correlation with gold, but it's probably more of a similar story to silver, because again, silver has its industrial uses. Obviously, oil is what powers industry. It oils the wheels of industry, what with transportation, with production, with all sorts of different things. So that's why, again, oil is probably selling off, and it's actually sold off. If you look at the oil chart, you can see it's been quite a rapid sell-off just recently. And that is a very negative, we've seen some very negative candlesticks here. And it tried to go higher, and I think this attempt higher here, I'll probably enlarge that even more, just hopefully so you can see it. This big shadow candlestick here, it attempted to go higher, and this was probably off the back of the Israel concerns about an Israel retaliation on Iran. And that virtually evaporated. Nothing really happened, and it's a minimal response. And so the potential for oil to go higher if there was going to be disruption through the Persian Gulf, and 25% of oil, the world's oil, the seaborne oil, as it were, is actually transported through the Persian Gulf. And so the risk to oil deliveries was massive. And once that disappeared, once the risk evaporated, then we see oil price just sold off so fast, right to the bottom of that candle. And right now, there are no particular tensions. And as I say, the OPEC reduction in oil production, so they reduced oil production by 2.1 million barrels a day, I think it was, at the beginning of 2024. That's what drove oil prices higher. A lot of those reductions were never actually delivered. And so that's another reason for oil to be selling off. So there's a lot of reasons right now, a lot of things that are basically saying oil is not bullish at the moment. But that could change, obviously, if we do see any more pickup in geopolitical tensions. That's probably going to be the big driver, because I don't think it's going to be economic driver, because I think the economy is on the verge of slowing at the moment. Although, again, having said that, I'm always giving both sides of the argument, or trying to. We are seeing UK and Europe showing the first signs of picking up, but then on the converse side, we're seeing China, they're talking a strong talk, but the actual real estate is still in a real mess in China. And so they're having to do bailouts to try to keep liquidity in the market there and keep things afloat. And I think finally, because we are expecting Eric to come on in just a couple of minutes now, finally, XRP is showing some signs of life from the bottom. We saw a nice shadow to the downside, which again means price tested to the downside. Yes, it was still a large red candle, but it tested much further to the downside, down to 41 cents, and finished higher. And we're now back at 53 cents. So very, very big price movement there. These are daily candles. So that's a lot of price movement from 41 to 53. Well over 25% or something in just a short period of time there with XRP. So yeah, all in all, I think it's generally looking quite positive at the moment. And I've said, I think that we are going to see a bit of a not just an altcoin season, but a total crypto season, I think, is on the way. I think the narrative behind Bitcoin is amazing now. There's so many positives behind it, and there's virtually nothing on the negative side. That's always a dangerous place to be, but we're in such an early stage, I think, in this potential Bitcoin boom, Bitcoin pump, that I think there is a lot of potential for upside, and probably way too early to be worrying. And even the fear and greed index, we're not in any way in an extreme greed situation again. Now it dropped right down, and we've still got plenty of room to pump to the upside. And volumes, as I say, as you can see, again, volumes are quite low. If volume comes into the market, especially off the back of things like runes, if volume comes back in, then that's going to be really, really positive. And I'll just stick on RSI, I think, just to see where we are with RSI. Let's just see. Yeah, we can see RSI is actually it's actually below 50. So there's plenty of room for RSI to move up to overbought. We're nowhere near overbought, right in central territory, sort of no man's land. So plenty of room for upside. So all the indicators, all the signals, all the fundamentals, everything is looking pretty good at the moment. So I'm hoping that we have Eric in the
yes,
background.
we do. And
Fantastic.
We can bring him on. Add him to the stage here. Remove you. How are you, Eric?
All right, good. Can you guys hear me?
We can. Fantastic.
All right. Hey, thanks for having me again. It's great that the tech is playing nice today.
Absolutely.
So just to piggyback off of Matt, I think Matt, yeah, with Bitcoin closing above 65,000, that was a big level for us, which is exciting. You did mention there at the end about runes, and I know last time I was on the show we were going to talk Solana, and I mentioned to Matt it might be a good time just with the Bitcoin halvening and everything that's going on around Bitcoin right now. it might be a good time just to bring up runes, because I know a lot of people in the space are confused. What is a rune? Why should I care? So I was going to lightly just touch on some of that and hopefully educate, but also bring it to a point where hopefully we can understand too. So what I did was bring my slide here up on stage. Let me see if I can present that. There we go. All right. So big milestone with Bitcoin happened on April 19th. The halvening had occurred, and that's significant in just layman terms because supply is down. We see some demand. We're hoping some more demand comes in, and I really think that this is where the runes come in to play. So real quick, what is? Oh, actually, this is a great slide. So over the history of halvenings with Bitcoin, you can see here starting back in 09 when you had the first halvening, and really on every single cycle through the halvening, we've pushed higher. And you can see we're currently right here. The question everybody's having is, will we even follow this similar pattern? But you can see that since the halvening has occurred, supply has been cut in half every single halvening. So back in 2009, miners used to be rewarded for 50 Bitcoin every 10 minutes for mining. We're now down to 3.125 per 10 minutes. So that supply is drastically cut in half. And now we see this demand, and this is really what has everybody wondering, right? We have the Bitcoin ETF approval that happened in the United States earlier this year. We have the Asia ETF approval that should be happening here any day. So with that environment, we've never really been able to see, okay, what happens post halvening when you have some of these regulations coming to play that are positive for the space, right? So this is bullish in my opinion. I love this trend. You know, there's a lot of people saying, where will Bitcoin go this cycle? I've heard 120,000. I've heard 240,000. But in any case, we see mass adoption starting to take place. And for me, that has me excited, especially when you start talking about new technology and new innovations that are coming to Bitcoin. So what is a rune and why should I care? Right. So where this all really started was last year, and Bitcoin did what they called the ordinals movement. And ordinals is a fancy term for an NFT. So what happened is a bunch of degens got on chain. They started making NFTs on Bitcoin because it's the legacy chain. And we really saw some great movement last year with this. Volume really started to increase. Enthusiasm around the community really started to pick up. And so these holders that had these ordinals, or what they call pre-runes, were then coming up with new ideas of how can we post-halving create some more innovation, get more eyeballs on the space. And they said, what better way to do that than a rune, aka a meme coin? So really that's what it is. A rune is a meme coin that is now going to be on Bitcoin. The significance is that they actually etch these meme coins into the blockchain. And so post halving, the block, and this again gets a little technical, was the 840,000th block. And that block is where the first 10 meme coins were etched into Bitcoin history forever. And so again, that's pretty geeky. A lot of people really won't care about that. You know, the normies and retail, they don't really care about that. But what they do care about is opportunity, right? They do care about hopefully making some money and making some wise investments. And so everybody knowing Bitcoin and knowing that this is really the legacy chain. I know when I'm talking with friends, and I even mentioned Solana, a lot of them are like, I've never even heard of Solana. You go and you say Bitcoin, ears perk up, right? Everybody knows Bitcoin, still not really sure about it, still don't really exactly know what it is, but they do know and have heard about it, which is exciting. So here it is. Here's the first 10 runes ever minted on Bitcoin. And you can see the names of these. A lot of this was created again by the community. Uncommon Goods is the first ever. It's number 0, the first ever meme coin minted. You can go out and get these coins over a 4-year period. And I won't get too much into the details of how these little communities not only etched them, but then are minting them and how they're going to get them in the hands of retail. But right now, what I would say to you guys and to anybody watching the show, that what just happened over the weekend with the runes in these meme coins, this is almost like the pre-sale meta. This is where, again, a lot of retail doesn't know this is happening. This is community-based, community-driven, but something that can tell you that there's some movement here is really in the numbers. And I know Matt will appreciate this, and David, you'll appreciate this, being numbers guys. So over a 1-day period, post-halving, Bitcoin generated almost $78 million in fees. And you can see how much more that was than Ethereum in that 1-day span, right? So why? Popularity. Everybody over the weekend was minting meme coins, paying excessive gas fees to do it. There's Twitter shots going through X right now showing one guy spent $27,000 to land one transaction, right? And so what's happening is that everybody's racing to see where they can position themselves within this movement. And so they're paying extraordinary costs to do so, because they believe that once they own whatever they're chasing right now, that they're going to be able to not only keep that short term, possibly long term, but as this transitions into retail, they're going to have a good position in this space. And again, when you start talking Bitcoin, you got to remember that you have a ton of community driven individuals who have been along this ride, most of them since 2012, and they love the history of this. They're collectors. They call them digital assets or digital collectibles. And you can really see that in a 1 day, typically just in about 15 million fees per day is usually where you see Bitcoin. So pretty large. So here's one that's really being the talk of the town, and we all know what dog coins do in any chain that you're on. So this coin right here is called Dog Go to the Moon. Pretty easy, right? They got a cute little dog and a Bitcoin hoodie. Hoodies are, again, synonymous with a lot of these crypto communities. So this one right here is something that I really think you're going to start seeing a lot. It's already trending on Twitter or X. The reason that I'm bullish on this coin is that this truly is a community coin. There was no pre-sales, there were no influencers. It was not only developed by the community, it was minted and etched by the community, meaning they took donations, no pre-sale. So people donated to get this coin onto the Bitcoin blockchain, and then it got dropped to the holders who have been in the community for the past year. What's really going to happen with this coin is that they've been teasing a lot about Binance listing, and that's when we will start seeing this break into retail. So keep your eyes open on this one. This one, again, with that list that I shared in the past, Uncommon Goods, Dog Go to Moon. There's another one that was created by a group called CyberKongs. It was the NFT in 2021. It was amazing what they did with that. They're involved in this space. So you see a lot of these old creators coming in and really seeing the opportunity in Bitcoin. And what I think is happening, and what Matt even mentioned a little bit, is you're seeing this volume pick up over the weekend. Now, will that be enough to sustain long term? I don't believe so. But what we're doing is not only recreating a community, but we're enforcing a community that has already been existing. And so that has me just really excited about the space. I did really, want to introduce this to you guys, and then just leave a little bit of time just for some Q&A, because I'm sure you have some questions, and I'd even love to hear, what do you guys think about this? Is this just another cash grab, or do you think that this is another way that communities can be formed, but then also bring others into the space, because that's always the goal, right? To bring people into this space and get them excited about what it can do.
Absolutely. I did notice over the last week or so that the Bitcoin ordinals has more transactions than OpenSea. So I think that Bitcoin stands as a more solid foundation for NFTs in general.
Yeah, and really what you're seeing between Bitcoin and Ethereum is Bitcoin's really starting to pull away. There's a lot of movement going over there, and I'm personally watching what I call the exodus from Ethereum to chains like Bitcoin and then again to Solana. So over this next year, I I expect, and my prediction is that you're going to start seeing a lot of the old Ethereum investors start moving to Bitcoin and to Solana, which we're already seeing in Solana, hence the uptick in volume there as well.
And my question would be, how does runes compare to ordinals?
So they're completely different. So an ordinal would be the old, what they call BRC20 token. And
Mhm.
that was just a fancy word just on how that ordinal would interact with the blockchain. So the reason that they're moving away from ordinals and BRC20 is it's very slow. It leaves a lot of what they call junk on the network, which congests the network. What's going on with Solana right now. So you can see when you start getting heavy volume and you have tokens that are inefficient, that causes congestion. So Runes comes to solve that with the new technology, and how they plan to proceed will be with this new Rune moving forward.
So is it like, I mean, I just likened it to when Bitcoin was first launched. I mentioned that there was, on the first block, they encoded a Financial Times headline about the second bank bailout. And that was all about, you know, Bitcoin obviously being decentralized, but it's actually encoded onto the block. Is that similar to what we're talking here with runes?
It is. So the runes are actually etched into the block as well. And that's the historical significance of those first 10 coins. And again, the collectors are going to, you know, keep those, and probably, you know, I've heard a lot of people saying that they're just holding. This one's one of those that this is 2024. People really see this being the catalyst for Bitcoin to really make that next leg up and truly be the digital gold of our time. So that's the
Yeah.
whispers right now in the community is all of these runes, aka meme coins, are a hold, and they expect the ones that do well to do really, really well. I mean, they're talking, if we don't do, you know, billion market cap, that then everything wasn't worth it. And that's on the low side when you start comparing to Dogecoin and some of those others that hit 40, 50 billion market caps.
Amazing, yeah. And I was speaking to somebody over the weekend. I mean, there's been a lot of crypto events. We've had Crypto 2049 here, Token 2049. So there's a lot of people in town for the past few days. So I got to meet them despite all the floods eventually. Very interesting. Some of them were saying that what people really miss when it comes to marketing is they're always looking for new customers. And actually, they've got so many existing customers that they need just to show innovation like we're seeing here. And this is really when you can engage your existing community. They're the best salespeople you will ever get, because they're going to talk to people, all their friends, with enthusiasm. And so it's about providing innovation for the existing communities, and that appears to be exactly what's happening. So I do see this as a real second season for Bitcoin, I think.
Exactly. And you can see that in the fees that I just displayed, you know, on the previous slide at $78 million in transact in one day. And so you can see that there's enthusiasm here. And I don't think that that'll die off any in the short term. Now, how long will that last? Will that get us through this cycle? I don't know, but you can absolutely see that the current community is enthusiastic. And then you'll know when they start spreading the word and telling other people. My reservations is a lot of this still has a heavy technical lift. So until we can solve some of that, we're not going to have what I call the normies or the people who want to get on, want to get involved, but the hurdle's just still so great. So that's where I'm just waiting for the breaking news on what coin what runes gets that Binance listing. Once that happens, and then you have what's going on with Bitcoin right now, I do see that there will be some good opportunity there. And I expect an announcement here within the next few days on the first rune to get that Binance listing.
Yeah, absolutely. I mean, we
Nice.
saw some of the coins get listed virtually immediately within a matter of days just because they got that market cap. So as you say, I think there'll be listings literally within days. And yeah, everyone will jump on the bandwagon. They don't need to understand fully. And people just see the opportunities there and they see what's happened in the past. And so they will jump on. And I don't think you need to understand fully because that's for the techies. But it's not necessarily healthy for that to happen long term, to be jumping on things that you don't understand. But it's going to happen.
I myself am still surprised by meme coins in general and how it really does get people excited, especially the younger generations. All they need to see is a picture with a dog in a hoodie and they buy, right? And again, dangerous, but it does bring people to the space. Now, there's pros and cons of that because if you lose all of your money, you're going to exit the space really fast, right? So how do we bring people to the space, have them continue to stay in the space, and hopefully do well in the space? Sorry, David, what were you going to say?
What would the first steps for people that want to get involved in runes? What would the first steps be?
The first step would be I would direct you to a site called magiceden.io. And that is where a lot of NFTs are being traded right now. You can buy Solana NFTs on there. You can buy Ethereum NFTs on there. And now they've been the biggest Bitcoin ordinal marketplace really the past year. They're getting ready to now within, I'd say 24 to 48 hours, launch the retail marketplace for these runes. So you'd go on to Magic Eden, create a wallet, and then that's where you would be able to buy them. That's a good opportunity if you're willing to do that small lift. And again, for some people, that's a big lift. But if you can get on there and start collecting some of these coins now before they do get that Binance listing, I think that that's a really good position to be in.
Very good. Early bird gets the worm. Thank you so much for coming on, Eric. We'll look further into runes. Matt, thank you for another amazing analysis, market analysis.
Thank you, David, and thank you, Eric. Yeah, look forward to.
Thank you guys. Yeah, for having me back on, and so glad that the technology worked this time and I could actually get through.
Fantastic.
Absolutely.
Look forward to more. Thank you.
Stay tuned to stay lucrative.
Cheers.
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost, become a champion of free speech, and help to reshape the future of media.